Well, as always, Chairman Jay Powell kicks off the conference. He's going to be talking about your framework review. What has that review produced?
So the chairman will highlight in his remarks his points about the framework review. I will just offer you from my perspective that this has been, I think, a useful process. It's been a process that really asked of ourselves to look at what we've learned over the past decade, to try to think about how the economy may have changed, and importantly, to think about how we communicate to the public. So the process in and of itself, I think, has been a useful one, and I will leave to the chairman to talk about what we've learned from that.
Well, you've been considered an inflation hawk. Where are you on this idea of average inflation targeting?
So my focus on inflation, Mike, as you know, is to be true to our price stability mandate, that our 2% target really has to represent what's happening in the real economy. And so as we think about ways to better communicate to the public, I've never thought of 2% as a ceiling, but to really stay focused on what anchors inflation expectations in the economy. So from a communication standpoint, I think we will be talking about the kinds of things that help us do a better job of achieving our objectives.
Wall Street's betting, or at least many people on Wall Street are betting, that the Fed will change its forward guidance in September. Some of your colleagues say don't need to do that yet. Where are you?
So I would agree when I look at what the Federal Reserve has done since March in terms of interest rate policy, in terms of asset purchases, and the credit facilities we've had. I think trying to gauge what else does the economy need is probably premature. I think we are beginning to see signs of a recovery. We're beginning to see where the economy may have shortfalls, where it may be doing okay, but that is going to take some time. So thinking about what those other things are, I think has been a useful discussion. Whether it's time to activate those things is something we'll be debating.
Well, in the run-up to your conference and Chairman Powell's speech, there's an awful lot of discussion about inflation going on Wall Street and in the financial community. Do you think that all the stimulus that's been pumped into the economy is perhaps an inflation danger down the road?
Well, as a central banker, I think we always keep our eyes on inflation and what impetus may come to that. I think importantly, what we see today are really generally deflationary kinds of forces. So until demand comes back, until we see the economy regain its footing, it's hard to see in the near term. But as you point out, there is a lot of stimulus that may be out there at the point that the economy regains its footing. And we'll have to look and see what impact we see through prices at that point. But today is probably not that day.
Well, let's focus on your district, the 10th district. How would you describe the economy there right now?
So I think we see some encouraging signs. This region, of course, has experienced the virus in different time frames and different levels of spread over the last 5 months. And what we see overall is there has been some improvement in the job market. We have seen some businesses that are beginning to come back. But of course, that's coming back from a very low level. Particular to this region, of course, things like agriculture and energy are very prominent. We know the farm sector has been under some stress for some time with low farm incomes. And this episode puts further stress on that, causing the farm sector to have to rely more heavily, for example, on government supports. Energy, too, with the rapid decline in oil prices, productivity, and the producers had to lay down their rigs. So those two sectors in particular in our region, already under some stress. It will take some time, I think, for them to come back.
If I could ask you to expand on the labor market. What are employers telling you right now? Do they need more people? Can they find more people? Or are they just sitting back at this point and saying, we have to wait and see where the economy goes?
So we hear a variety of things that won't surprise you, but very important as we've talked to our contacts in the region. Again, it is often a function of the sector they're in. If they're in a part of the economy where they're dependent on air travel, dependent on entertainment or dining, they are struggling and having a harder time. And bringing people back in those sectors looks to be some time away. We also hear that some are having a hard time bringing people back because they felt like they were competing with some of the jobless benefits. Whether that's true today is less clear. So there are a number of dynamics that are affecting that labor market. And that, of course, is why it will take us some time to see where does all this shake out in terms of how that labor market heals and how we begin to see growth resume in the economy.